Hello and welcome to another update video about FET. We take a look at the FETCH.AI chart today. Obviously, FETCH.AI is one of the coins that has been correcting in recent weeks, in recent months. It had a really nice rally, like many altcoins, from last October onwards into this year. And now it's correcting. A lot of people are switching off, when we have these boring times. But that's actually a mistake, in my opinion, because we are normally dealing with a correction for a certain period of time, and that correction is finished at some point. And with the Elliott wave method, we're looking for uptrends. We're looking for uptrends, and then within those uptrends, we're trying to identify patterns. And with those patterns, we can identify pullback zones and support areas which can be defined and used for trading. And we already dipped into the support area. So maybe some of you use the support zone already because we've already left the support zone to the upside. However, we have not yet started the next sustained uptrend. At least it's not very clear yet. I think one more low is still likely, but doesn't have to happen, given that the price already dipped into the support region, okay? And it already reached an ideal price. I mean, it dipped into the middle of that support region. Now, if we zoom out a little bit, you can see that FET really performed nicely, especially from the 2020 low, but then also more specifically from the November 22 low. And we've seen here a large ABC structure. That's the current idea. 3 waves in wave A, 3 waves in wave B, and then the C wave rally to round about 622 or maybe even higher, but let's just keep it, let's keep expectations realistic for now. The next larger degree Fibonacci upside target is around the $6 mark. So we have a smaller degree target around $5, and then $6 is the next larger degree. Just above that, we've got then $8.40, $12.62, and $19 as $19 is the next larger degree Fibonacci target. So I'm overall looking at this as a large A, B, C structure. So that gives you the next upside levels. Most of the bullish run is most likely done. Okay, most of this bull market is likely already, done. Okay, I mean, in terms of percent increase anyway, I hope that's clear to everybody. Okay, sometimes a bit of an eye opener, but it obviously started, at around about 6 cents down here in November 22. And then in August 23 at around 17 cents. At the time we already covered this one. It's now at around over $2. It's not going to get these percentage increases anymore, okay? So it can still triple, quadruple maybe, yeah, no problem. But we probably won't see this like ridiculous rally anymore. So that's, I think, an important realization. We have completed on the longer time frame in this C wave, a wave 1 and a wave 2. We are likely now in the third wave. The third wave is likely a 5-wave move. A 3-wave move because of an overall diagonal structure that's forming here. So I've got an A wave and the B wave. This is now likely the C wave, which started in February this year. Now, if we go to the 4-hour chart, we can see the detailed wave count for this. Other interpretations surely possible, but based on this assumption, we've completed 3 waves up. This here is a 4th wave pullback, which is quite substantial, like many other crypto charts are showing a similarly large wave 4 at the moment. And then as soon as this is over, the wave 5 should start. The $1.27 level is key support. We've got the last low at $1.68. That was the swing low from the 13th of April. As long as this level is holding, the yellow count has a chance, which means the direct upside pathway, okay? It would only be possible as a diagonal pattern, not a problem, because this 5th wave could easily be an ending diagonal. But to keep that wave count alive, the $1.68 level needs to hold. Actually, more specifically, the 1st of May low needs to hold at around $1.85. So you've got a very clear invalidation point there for the short time frame direct uptrend. You don't need to understand about Elliott wave to know about these levels. Below $1.85, it becomes much more probable that we're going to follow the white count here, which seems to be forming some kind of a triangle here in a B wave, and then we could get one more low to round about $1.57 or $1.27. As long as the $1.27 level is holding, however, the overall assumption is valid, okay? that we are here in a wave 4 pullback, which could lead to a wave 5 rally, then into the $5 to $6 region. So just be aware that, yeah, we could get one more low. Still absolutely something we have to consider, you know, for anybody who is looking for maybe adding a few more FET tokens to their own wallet, to their own portfolio. I mean, maybe it's worth holding some money back in case we get another dip. That is what the analysis tells us. It's at the moment still likely. It takes a break minimally above the last high at $2.63 to suggest that we are starting the next move up. Better would be a break above the $3.13 level, which is the March high. That's my update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.